Hi everyone, welcome back to the US CPA classes for regulation exam. In this video of US individual taxation of gross income, that's part 3, we are going to cover computation of tax and credits. So let's dive into it.
Good morning, everyone. Hope you all are doing really good. So, in the last class for regulation, so we were in chapter 4, right? So, first and second we'll be doing later, but third chapter we have completed, which is the taxation on assets. Then we started on chapter 4, which is being like incomes and exclusion. And if you remember in the last class, I emphasized on this table, which is like computation of taxes and credits, which is basically the flow of overall computation of income, starting from total income, then reducing exclusion, reaching out to the gross income. After that, we'll be reducing certain deductions from gross income to arrive at adjusted gross income. And then after, you'll be reducing either itemized deduction or standard deduction, whichever is more beneficial to you or your client, right? So that will give us like taxable income, and then you'll be multiplying the marginal tax rate, and that will give us the tax liability. And then on tax liability, there may be some additions on account of interest or penalty. But what you can reduce from total tax liability is all your tax credits, withholding tax, estimated tax if you have already paid. So it may result into final either a tax due or it may result into a refund. So, basis all this information, you all will be filing form 1040, which we have gone through, right? And so in the last class, we started on the gross income side and the exclusion. So, hope you remember in the last class, we started with like this, like the column second is basically like types of income. Column third is sources of income which need to be considered as income. And last column is exclusion, which out of this type of income, which income you should not be considered as taxable income, right? So we started from there. I think we have covered with this wages, salaries, and tips. Then we have covered interest income and dividend income also, I think. Uh, Rent and royalty income also we have completed. And I think till gambling income and losses we have covered, right? Hope you all are on same page. Any doubts so far before we jump on to the new topic? Yeah, Sadaf, Rakesh, Manish. I think we have covered till here only. Gambling income and losses. Hey guys, yes. I can see something in chat. Yeah. Okay. Thanks, Sadaf. So now we are starting with income from waiver of debt. So waiver of debt or cancellation of debt is always been income, but there are certain exceptions to this general rule. So what is actually like waiver of debt? First, understand that. For example, like any person has taken maybe purchases any inventory from any third company, so he or she is being liable to pay the amount for the inventory he or she has purchased. But now for any reason that person is not in a position to pay, maybe on account of bankruptcy, maybe on account of insolvency, or maybe on account of other financial crisis, right? And the person and they both like debtor and creditor, they sit and reach to some negotiation. For example, the initial transaction was of $100,000, and they reach to a conclusion that the creditor will pay to the debtor maybe $60,000 instead of $100,000 as a full and final settlement. And that debtor will waive off or maybe like cancel the debt of 40,000 in full and final settlement. So the amount which the debtor is foregoing is the income for the person who is receiving the benefit, right? So that is called waiver of debt or cancellation of debt. So maybe you can note it down this as a small illustration or example, or maybe I can put into the Excel sheet, or we can pass on some journal entry just for the safe side. So let's assume there is like Mr. X. Mr. X has sold uh, 1,000 units of product A at the rate of $100 each to Mr. Y on Jan 1, 2023. So let's assume this is a transaction. The value is $100,000, right? So in the Mr. X books, and let's assume this is Mr. Y books. So, right. So in the books of Mr. X, what should be the journal entry? X is selling, right? Mr. X is selling 1,000 unit at the rate of 100 each to Mr. Y. So he might be booking sales to Cox. Yes or no? Sales account debit to Mr. Y, which is like account receivable for him. Are you guys with me?
Yes, sir.
Right.
So
So this
sales
will be,
account debit.
sorry. Oh, sorry,
Sales.
my bad. Sorry. Sorry. Account receivable to sales. Account receivable to sales at the time of sales. And on the other side, let's assume this inventory which he is selling has a cost of, let's say, $60,000. So another entry he'll be making is account debit to inventory. Let's assume $60,000. $60,000. So that will be like the journal entry in the books of Mr. X, and that will be on 1st January 23, right? And what will be the journal entry in the books of Mr. Y? Inventory count debit to Mr. X, right? Which is account payable for him. Make sense? Are you guys with me?
Yes, sir.
Yes.
Right? So this will be the journal entry he'll be making. He'll be recording inventory for the material purchase and booking the account payable, right? So maybe let's assume on 31st December, 31st December, they have reached to a conclusion that Mr. Y do not have money to pay. And then they reach to a settlement and they have decided that Mr. Y can pay $60,000 to Mr. X and settle the amount, right? So when you are doing like full and final settlement as a receivable, so what will be the journal entry you might be making? Cash account debit with $60,000 you are receiving, right? Loss on settlement 40,000, right? And then your account receivable, right? So this will be the journal entry in the book of Mr. X. Are you all with me?
Yes, sir.
Right? On the other side, what will be the journal entry in the book of Y?
Mr. X AP
Mhm.
debit.
Mr.
Mr.
X.
X AP.
Sorry. Mr. X AP account.
$100,000.
Mhm. Two.
Then two
Cash.
cash
60,000.
60,000.
Right, and 40,000 will be
Gain
waiver of debt.
waiver of gain on waiver.
Right. So this is what